broadcasting live from Houston, from the space city to the world. You are watching Now Media Television.
Welcome back to Biz Talk with Sherman. I'm Jessica Liao, sitting in for Sherman this week, who, like I said at the beginning of the show, has tested positive for COVID. We're going to keep him in our thoughts. I heard he's doing better. He's not to himself yet, but we're going to try and fill in those big shoes and just keep him in your thoughts. And you know, as we look forward to round out this year, 2021, we're looking forward already to next year. And that we want to talk to you about tax planning, and we have Ranjit with us, and he always has the best advice when it comes to taxes. Hi Ranjit, can you hear me?
Yes, I can. How you doing? How you doing, Jessica?
Hi there. Welcome to the show.
Thank you. Yes, I wanted to talk to you guys today about the home office deductions. A lot of people usually don't know about, well, they may know about the home office deduction, and they just think about it's the standard, the $1,500. But there's a lot of ways to get it a lot higher. And let me explain to you, and also the benefits of actually renting, that instead of owning your home, you actually have a lot more tax advantages when you rent. Oh, could you let me share screen?
Yes, give me 1 second. We'll share that screen for you. I'm glad you're talking about home office deductions.
That is a common thing. Like everybody's starting their own business and they have a little bit of profit and they want to reduce it because you have a lot of taxes you got to pay. So yeah, and the home office deduction is a great thing, and I'm still waiting for that share. There we go. Okay, we're first going to go over the renting. I already filled out something here. Get a little bit larger. So a lot of times we're all renting our home, right? Like we have an apartment, let's say, and we're starting a business. Like we're trying to make it. And the normal size is about 1,400 square feet. Could be higher, could be lower. But the key number is you want to make your workspace 300 square feet. That's the number you like it, right? Make it your workspace, make it a particular spot in your apartment that's your workspace is actually be 300 square feet. So that means the percentage that'll be tax deductible for a lot of things will be 21%, which is 300 divided by 1,400 makes it 21%. So let's say your rent is $1,300 a month. That means your yearly rent is $15,600. Electricity with Houston, goes high enough. Sometimes it's over 100, sometimes it's under. But let's say it's an average, it's $100 a month. So yearly electricity is $1,200. Then you have gas and other expenses, it's $100. And then yearly expense makes it $1,200. And also even cleaning your apartment. Like sometimes we hire somebody to clean our apartment. Or I hire somebody to clean my home because I'm too busy to clean. So that yearly cost is $100, monthly is $150, so it's a yearly $1,800. So your total yearly expenses is around $20,000. Well, the IRS lets you do a standard deduction of $5 per every square feet in a whole year, which is only $1,500, right? And if you're using TurboTax, you'll say, I don't know this. I'm just going to put the standard whatever. But if you're able to actually come up with all these numbers, we're going to be able to actually do a tax deduction of over $4,242 just by using these calculations. Because I got the total year expenses of all of these items. We multiply by how much is actually used for your property from your home office. We'll be able to use 21%. So 21% of the $19,000, you get this total tax deduction of $4,242.
Wow.
And then another one that a lot of people, this is also a common thing that a lot of people don't know about, is your internet, right? How much if you're working from home, a lot of times, like I work mostly just from my home, and most of my internet is just like doing work, QuickBooks Online, a lot of it's on the internet. So your internet expenses, let's say it's $120 a month, right?
Yes.
So yearly, it's 120 times 12, it's $1,400, right? Yearly internet expense.
Wow.
Now, how much do you use for your internet, for your business, right? You come up with that percentage. let's say I use you don't want to go to like 95%. That's ridiculous. Let's say it's 75%.
Right.
Of you're actually using your internet for your business. So you'll be able to use on your tax deductions your internet bill to $1,000. So that becomes a tax deduction also. And that because you're using your home as internet, I mean, primarily use it 75%. So you actually have an extra $1,000 a year. So in total, you got about $5,000 worth of deductions that you need to know about. Now, the key thing is this is for renting, but its big difference is if you're actually owning your home, right? Let's say you're owning your home is only 3,000 square feet. So you got 10%, and you're not going to be able to use your rent. You're going to have to use interest. Only interest. So if you own your home, you can't really use it. So your interest, let's say that's 700. Electricity, yearly gas and other expenses, cleaning, total year. So now your tax deduction is only 1,200. So sometimes it's even better to use a standard deduction when you're when you're owning your home. But it's also depending on how big your home is, how much, right? 3,000 maybe it's a bit big actually. Mine was about 25. So there's not a huge, well, it's about the same.
Right.
But key thing is the internet expense you can't always use. Now, this is a common mistake that I see a lot of people do is when they own a S Corp or a C Corp, is that they need to talk to their CPA and ask them, because if you're on an S Corp or a C Corp, you may not take advantage of the home office deduction because you need to tell your CPAs that I want to be put on an accountable plan. The key word is you want to talk to your CPA and say, hey, am I on an accountable plan? And they may just say, no, you're not. We never really discussed it, yada, yada, yada. It's like, cool. I want to be put on an accountable plan. I want to make sure we're taking advantage of home office deductions, the internet deductions, all the reimbursable expenses from the business needs to come with you in that year. So a lot of this, if you're a normal small business, which is a sole proprietor, you can easily do this at the end of the year. But if you're an S Corp or C Corp, it needs to be done within the year of the transaction.
Well, I like that you mentioned the home office deduction of one of the areas that as business owners we are falling a little bit short, maybe because we're just not informed. What are some other areas that you find as you work with business owners of areas that they're falling short or are cheating themselves, so to speak, in deductions?
A lot of times people I find are not able to make a lot of their deductions. One is a home office. Is because a lot of times people, the CPA they're working with never really just discussed with them, and they're like, oh, the guy's just running through. So this is a major one. Also, sometimes people are missing out on their retirement plans. I think we'll be discussing HSA plans. Basically, another way, like people are not fully contributing to their HSA, setting up, if their business doing well, setting up a 401k plan. If you're single member, you don't, and if you're making 150,000, you want to save up for retirement. People need to set that up, and it's easy to do if you're just a single person, you have no employees. So a lot of times these deductions that people need to worry about is they need to talk about payroll, retirement, things like these.
You know, the benefits, a lot of times people look at the software, tax software, but working with someone like you can discuss with a business owner and ask the correct questions. Is that one of the benefits of having someone work with them like you?
Most definitely. A lot of times, if you're working with TurboTax, and don't get me wrong, I actually believe TurboTax is a great system, but it's only really good for people that are on a W-2, because with the actual tax cut plan that happened about a couple of years ago, there's not a lot of advantages going to a CPA if you're a W-2, unless your income is within $400,000 or $500,000. If you are a business owner, it's a very big different story, because we have these discussions. Okay, well, because the tax software is just, you're just going to put in the numbers, and they're not going to tell you about like, hey, this is something you need to work on. Maybe we can actually figure out some taxes, maybe not this year, but next year, hiring children. That's the benefit of working with a CPA. But if you're a W-2, go ahead and use TurboTax. It's actually a great software if you are just an employee for a company or a large corporation. But if you have your own business, you need to talk to the CPA to actually make sure your numbers are right and you're taking advantage of taxes, your tax savings.
Okay, so we finished off this year. We'll start preparing and getting our taxes ready for next year. I think we touched on this a little bit last time we spoke, but what are some things that we can do? Let's remind everybody, what are some things as business owners we can be doing right now before the end of the year that may help us when filing our taxes for this year?
That's a great question. The main thing is you probably need to make sure if you are on a 401k plan in your business, you want to make sure you're maximally contributed, make the maximum contribution you can for the employee and the employer, just for yourself. Second, if you don't even have that, is even think about buying equipment. If you need equipment this year and you feel like your net income is really great this year and next year may not be so good because, with the COVID, we're not exactly sure. I'm assuming 2021 was a great year. Talking about, you may want to actually buy equipment this year so we can actually reduce your taxes. We can take advantage of both.
Great. So making that preparation for the new year, looking toward buying equipment that you may need now, so you can go ahead and use that in your deduction plan for next year, correct?
Yes, that sounds pretty much good. Like basically buy what you need this year. Your incomes are really high this year. Buy what you need this year so you can deduct it this year. And you're going to use a lot of that stuff for next year anyway. And your income's already lower, so you want to put your stuff on a lower tax bracket.
Are there any new tax things happening for the new year that we should know about?
There is a lot of discussion with the Biden tax plan, and a lot of it is still, I think Senate is still discussing in which is the right way. There's also talk of like the IRS is hiring a lot more auditors, but there's a lot of pushback in the Republican Party. So we're still in more of a wait and see. If they are doing so, is make sure that people are keeping their numbers in order because they are aggressively going to be looking out at things.
So we can start preparing for that right now, even though we don't know some of the things we still don't know is what you're telling us, but make sure that we have all of our paperwork in order, that we're making sure that we're documenting everything correctly. I saw your spreadsheet. Is that the best way for us to keep track of our stuff? Kind of in that spreadsheet form, you can use software like QuickBooks, correct?
Yes, if you're having a business, a lot of small business owners I know, they're like, oh, I just use a spreadsheet. And I always tell them, let's go away from that. Let's use QuickBooks Online. There's no way you can keep in tabs of it. QuickBooks Online is relatively cheap, $30, $40 a month. It's easy to maintain. It's very user friendly, and it just be able to do a lot more work. For the amount of money, a spreadsheet, you're more to make. I don't care how good you are. Even CPAs make mistakes in spreadsheets, but you need an accounting software system.
Right. Something, we always talk about investing, and when you're a novice, and sometimes you're busy in the busy work of running your business, but that QuickBooks kind of keeps everything in order for you, a filing system, so that when you go to, as you say, in business, go to your CPA, you can kind of bring everything and it makes sense. When you're at the end of the year trying to put things together, it could be a god-awful mess.
Right. And what's great about QuickBooks Online is that if you have QuickBooks Online, you're categorizing, you just offer the authorization of just like read-only access to the accountant. So they can be able to look at everything. And that means they're not going to come back and ask you like 1,000 questions, because we all know that when you talk to somebody, you're like, okay, here's my numbers. Then I'm going to go like, oh, cool. Well, I have questions about this. But a lot of times it's already set up. We don't have all the answers. Like, okay, I have a question. We just click it and we can be able to review things. So that's the advantage of QuickBooks Online. And when you have that and an auditor comes over and looks at like, hey, everything's categorized, everything is there, here you go. And it's easy peasy.
Okay, I come to you and I ask you for I'm coming to you as a business owner, the two most important things I have to remember when it comes to tax preparation. Top thing is you got to know what your net income is the best. I mean, the quickest thing people ask me, I got to figure out my taxes. They go, what's your net income? What is your net income right now? I was like, well, I don't know. I haven't done my books yet. I was like, well, I can't really tell you because it's all depending on what your net income is, right? If your net income is really high, there's different things. If your net income is mid, there's different things. So biggest thing is net income. 2 is what your expectations for next year.
So you have to have an idea, what is your expectation of revenue? Are you planning to increase, or is it planning to stay the same, or are you planning to decrease? So net income for the year, and the expectation of your revenue and your expectations of net income for the next year. Obviously, don't be too ambitious, don't be too conservative. You want to be right there. Be realistic.
So when someone comes to you and could you review that with them, knowing what they've made for this year and maybe the year before?
Yes, that does take a lot more work, but a lot of times we can be able to review over the net income. I would basically have to take over the books, and that's a discussion of basically maintaining their books, and then we figure out what your net income is. But
Again,
they
that's
need
the
to,
benefit.
that is something that we do.
Again, that's the benefit of not just having a software, but actually having someone you can take advice from. Should we be looking quarterly at taxes as we prepare through the year?
I would say quarterly would be good. I'm more likely with thinking like mid-year, look at 6 months, and then look at third quarter, and then look at the fourth quarter. So the first quarter, you don't have to worry about it too much. Mid-year is like the beginning of it. Third quarter, definitely take a look. And then around November, about mid-November, you need to take a hardcore look and see where you stand. And then you need to figure out if you're an S Corp, you need to increase your salary because maybe you're not paying yourself enough, and you got to make sure you take care of that. So you want to make sure where is pay very little. So because maybe you overpaid yourself. So basically figuring out where you are, probably the best bet would be in mid-November, but you should be looking at it like half of the year, third quarter, and then definitely mid-November is when you really make your decisions.
I think that's great advice. A lot of times we're waiting until the end of the year and time runs out on us. So if we take that look at 6 months, then we look at third quarter, and then we're really prepared and we're not feeling the rush come December.
Exactly. Like people tell me all the time, it's like, oh, I need to think about being an S Corp. It's like, well, what's your net income? And I was like, well, I don't know. It's like, well, the IRS doesn't like to backdate the S Corp conversions, and if you don't do it, you need to do it like we need to know this year. So I can send out the form for 2021 so we can backdate it to January 1. But if we're in 2022, it's going to be more difficult to backdate to January 1, 2021. So you're going to have to overpay yourself employment.
That's all great information. Thank you so much. One more time, let everyone know if they have a question for you or want to reach out to you, how we can get a hold of you.
Sure. You can always give me a call at 713-258-0196. So look at the other number there. And you can also reach my website at www.makh-accounting.com. You can also email me at ranjit@makh-accounting.com.
Well, we have all that information below during that segment. Thank you so much for your information and for being here with us again. Tax preparation, we all dread it, but we all have to do it. Coming up next, my passion, that's right. We're going to talk about mastering customer service with Jessica Liao. We are going to be right back with more Biz Talk with Sherman.